Hello everyone and welcome back to the Cedi Investor. We all know that there's a new company that is about to list on the Ghana Stock Exchange, and that is First Atlantic Bank. In today's episode, I want to answer two questions that I'm sure you are going to have. Number one, is First Atlantic Bank a good investment opportunity? And number two, is the company trading at a fair valuation or an overvaluation? These are two questions. By the end of the video, I'll give the answers to. So let's get into it. So like I said earlier, First Atlantic Bank has started the process to become a public listed company, and over the next few weeks, it is also going to be listed on the Ghana Stock Exchange as well. Now, if you don't know what First Atlantic Bank is, well, it's a bank just like any other bank in Ghana where you can deposit your money, can do savings, loans. They operate quite similar to every other bank in Ghana: Cow Bank, GCB, Standard Chartered, Stanbic, Fidelity. It's just like any other bank in Ghana. But the main issue is it a company you should be investing in? Now, looking at their circular, the company is planning on offering up to 101 million ordinary shares. Now, this is where it gets very, very interesting. The issuance, they are planning on creating 22 million new ordinary shares. However, out of the 100 million shares that the company is planning on offering to the public, 79 million is coming from existing shares. So the existing shareholders of the company as a private institution, 79 million of those shares are being sold by the existing shareholders to us, the public. Now, another important thing that I want to showcase to you guys is the listing date. Now, this is the date that First Atlantic Bank is going to list onto the Ghana Stock Exchange, and that is the 19th of December 2025. So if you missed out on the IPO, the initial public offering, on the 19th of December, that is when FAB is going to be officially listed on the Ghana Stock Exchange, so that you can go to your broker and go and buy the company. But that's only if someone is willing to sell to you. Now, even looking at the rationale for the offer, it says the issuer is undertaking the offer to allow the selling shareholders to realize their investments and to raise additional working capital to finance its regional expansion strategy and strengthen its overall capital base. So they are planning on raising about 742 million. Out of that, remember, they are seeing about 569 million will be going to the shareholders who are selling out of the 742 million. And about 57 million will be used for working capital. About 92 million will be used for the regional expansion investment. So, open up branches in other regions. It is even stated clearly here that in the event that the offer does not raise the full net application funds, the issuer shall treat the application received as first applications for the sale shares and prioritize payments to the selling shareholders. So they are even saying that if they're not able to raise the full 700 million, they will prioritize giving the money to the shareholders who are selling. Then the rest will now be used for the regional expansion and the working capital to increase the capital base. Looking at some of the projections the bank has, the bank is saying that the net interest income by 2020 is going to be 4.2 billion. Net fees and commission will be about 592 million in 2030. The assumptions they made here was that the average growth rate in their total income is going to be 33%. I don't agree with that. Average growth in profits before tax is going to be 43% every single year, Charlie. Crazy. Average growth in staff costs 40%. Dividends over the period is going to be calculated at 30%. And the average growth in the total assets is going to be 26%. These are assumptions the bank is making in whatever projections they have here. I think these assumptions are too high and to be quite difficult for the bank to achieve this. Now, when we look at the income statement of First Atlantic Bank, we can see that their net interest income, it went up from 588 million to 748 million. Very, very good. However, because of a massive increase in the interest expense, their net interest income went down from 400 million to 383 million. Also, the net fee and commission also went down from 140 to 129 million. And what I want you guys to note here is that FAB did something quite similar to what Cowbank did. The net impairment charge, 98 million. It went from a negative 101 million to 98 million. So this is where the money they set aside to cover the losses from DDEP and also defaulting from loans, they realized that they set aside way more than needed to cover those things. So they were able to bring back some of the money to come and support their income statements. And that helped them to get a positive operating profit of 370 million compared to last year of 207. So this is not really from the core operating business, but because of the money which was set aside and it has been brought back to support the statements. Looking at the balance sheet, the deposits from customers increased massively. That's quite good, from 10 to 13 billion. Investment in securities also grew from 2.4 to 3.5 billion. The cash in the loans was relatively around the same level as well. Non-performing loan, 21%, not looking that good. They need to take some time to improve upon this, especially if they want to start paying dividends. But their liquid ratio is very, very good, 134%. When you look at my sentiment here, I'm saying that if I believe the fair price of First Atlantic Bank is 8 cedis, the company needs to grow its net income by 28% to 325 million. And based on that, the earnings per share that I'm expecting the company to grow its income by is 3.2. Currently, its earnings per share is 2.49, meaning that the company's PE ratio is 2.9. For me to get a PE ratio of 2.5, based on the earnings I'm expecting from the company, I believe the company within the next 2 years should be able to do that. Now remember, the core operating activities by the bank, which is the net interest income and also the fees and commission, they all went down. The main reason why the bank ended up having a higher net income compared to last year was because of the net impairment charge. So the assumption here right now is, do you believe that over the next 2 years, the company's core operation, from lending, from investment in securities, the fees and commissions, are these things going to be improving to a point where the company naturally, from its core operations, will be increasing the net income? Even if you do a comparable company analysis, you can see that based on that, the company should be trading around even 10.4. But one thing I want you to understand about comparable company analysis is that you are assuming that all the banks are trading at fair valuation, which is far from the case. But all you know, comparable company analysis is not really even a valuation method I like to use, especially if you don't believe that most of the companies are trading at fair valuation. So overall, looking at the fundamentals of the business, I was not really impressed with the core operating parts of the business. The only way the company made net income was through net impairment charge. So these are things I would expect the business to improve upon. Also, when I compare the performance of First Atlantic Bank to the bank I believe is the best world position, which is JCB, there's a huge gap in terms of the performance, and I would so rather stick with JCB. Now, in terms of the price, I wouldn't say it's the most outrageous price I've seen on the market. Based on how banking stocks are trading on the market, like I said, even based on comparable company analysis, I could see the company trading around 10 Ghana cedis, especially based on how sentiment towards banking stocks are. For me personally, when I look at the business overall, I still think you are paying a premium looking at the overall business, the fundamentals of the business. But when you compare it to how other banks are trading on the stock market, it will not surprise me if the company, after even IPO, would rise to around 10 Ghana cedis. But that's my overall thoughts on the company. Personally, it's not a company I would be investing in. I still believe JCB is the best well-positioned bank when you're looking at the Ghanaian sector. But I could see a base case where people would want to invest into First Atlantic Bank. So that's the end of today's video. Comment down below what you think about FAB. Is it a company you want to invest in or not? Are you bullish about the company? Are you bearish? What are your overall thoughts? And are you planning on buying on 19th of December when the company is listed onto the Ghana Stock Exchange? Thank you so much for watching. Comment, like, subscribe to the channel. I really appreciate it. Until we meet again, have a lovely and blessed rest of your day. Peace.